QuickBooks Pro Plus Desktop 2022 OneNote presentation, Pay Employees. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introduction 7280, Pay Employees tab. Also take a look at the immersive reader tool, topic introductions in the text area too. Same name, same number, but with transcripts. Transcripts that can be translated into multiple languages and either listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, give accounting background to complement the presentations, and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, we're starting off with the home page. Down here in the employees section is where our focus is. Now remember, if you're going to be processing payroll within the QuickBooks system, you got to turn on payroll. We currently have the manual payroll turned on, which is perfect for practice, but not something you typically want to use in practice, given the fact that you want that double check of the internal controls for the accounting system software to kind of double check your rates and that kind of stuff. But the manual system is on here for practice purposes, and it's a great tool for that. So if we go on to the trial balance, when we process the actual payroll, which is going to be this icon right here, paying the employees, that's us kind of processing the actual payroll checks in essence. That will be decreased in the checking account by the net check. We'll be recording an expense related to the gross pay that would be paid the employees. And you can think about this by check, employee by employee, or as a total for all employees as one big journal entry. Conceptually, you can look at it either way from just an end impact on the financial statements. So we'd have an impact on the expense of the payroll expense, and then we're going to have the withholdings, which is the difference between the net check and the net check and the actual gross wages, which will be a liability. Then we're also going to have to deal with the employer taxes, which is going to increase a expense for the payroll taxes. The other side go into a liability because we have not yet paid those. We'll get in that a little bit more detail here. If we go into the processing of the payroll within QuickBooks, it'll look something like this. We got the pay period end, which may not be the same thing, although it is in this case the same date as the check date. And then we've got the bank account, which oftentimes could be the same account, or some companies will make a different account for the payroll, actually transfer money into the payroll account and then pay it. That being useful because the payroll can be somewhat complex. It can be an area where people are having the most you're most likely to have questions, people asking about their paycheck. And it's nice to have it all in one account sometimes so that you can go back and check it out there and make sure everything's lined up. We've then got the handwritten number here for the check numbers, and then we check the two items off. We're going to go into each of those items to add the manual information here. So if I go in there to Adam Hamilton, it's a salaried employee, so the salaried employee is being calculated for us. That part is even calculated in the manual system. But down here, we have all the withholdings, which are not calculated automatically and would be if we had the payroll paid for instead of the manual payroll here. So we're going to be putting in the payroll. We got the federal withholdings, which we put at 720. That is something that would be based on the W-4 information that we received. And it's useful, very useful to have the system help us with that calculation because it's a progressive tax system there with different tax rates. So we have to use tables and whatnot, depends on marital status and these things. So that's the most complex one to calculate, although the tables make it kind of easy. And then we've got the Social Security for the employees. This is more of a flat tax, although there's a cap on it. So that's one's usually a little bit easier to calculate. And then we have the Medicare, which is usually more of a flat tax as well. So these, we kind of made up these numbers, but you can get an idea for them here. The federal income tax definitely made up. The Social Security currently is 6.2%, and the Medicare 1.45 usually, but just to get an idea here of the withholdings. Note you also could have other withholdings for the state and local. Those withholdings will differ based on the state and local that you're at. We're just focusing in on the Fed at this time. You also could have withholdings for benefits, voluntary withholdings, in other words, that the employee chose, such as a 401k plan and or health insurance or something like that if it was offered and accepted by the employee. So then we have the net check. If we take the gross and subtract this out, we got the net check of the 3,572.70, and we've got the employer taxes of the 284, the Social Security and Medicare, which are in essence matched. We would also have the federal unemployment, which I'm not going to estimate at this time. It's usually a lot smaller, and there's a low cap on it, so I don't want to get into it in the weeds. We do have a payroll course if you want to get into these in a bit more detail as well. But that's the general idea. What's the journal entry that's going to be created for this one employee? The check is going to decrease the checking account, $3,572.70 for the net check. Then the other side is going to go to payroll expense for the gross amount, $4,583.33. We're going to have the difference of these payroll taxes here that are going to go to a liability account that we'll have to pay in the future, and we will have these amounts, which will be a payroll tax expense that will go up, and then the other side go into a liability account because we have not yet paid it as well. And then the same thing happens for Erica. So Erica, we got the $2,400 gross. We're going to assume the federal withholdings, $360, Social Security and Medicare taken out as well. That gives the net check $1,856.40, and then the employer portion here. What's going to be the journal entry for Erica? We'll see a decrease in the checking account of the $1,856.40. The other side going to the payroll expense, $2,400, difference payroll liabilities here, and then payroll tax expense for the employer portion, payroll liabilities going up there as well. So here we have them both checked off, and we can process the paycheck. So if we continue here and process these out, paychecks being made, you get a paycheck stub here, which will look something like this, which may look familiar, where we have to report to each employee each current check information, gross pay, and the withholdings, and the net pay, and the year-to-date information. This can get quite tedious to report all this kind of stuff. If you process the payroll within QuickBooks, then of course QuickBooks is going to generate all these other reports for payroll to help you with the human resources and reporting purposes, and help you create the 941s, quarterly payroll taxes, the 940 at the end of the year, the W-2s and the W-3s. But you can also imagine that you do this with a third-party payroll support like an ADP or a Paychex, in which case they might be responsible for some of this more detailed information, and you could still kind of consider or think about how you're going to get the information into your system for financial reporting purposes, which means you might not think of this as two separate checks, but you might combine them together and think of it as one full, payroll process. So if we then go to the check register, here is Adam and Erica. There's the two net checks that have been written. Notice it says paycheck, which is a little different than the check symbol on the normal checks. If you go into it, it looks just like a normal check, except the bottom of it has this different detail because it's the paycheck detail. If you go into that, then it'll give you that withholding detail. So then we're going to go down. What are the accounts that are affected? The checking account's going to go down. We've got then the payroll liabilities go up, and there'll be payroll taxes down below that we can't see right here at this point in time. If we look at the items, payroll items, we got the payroll items here and the payroll taxes that have been set up, and you can see the rates that have been set up when we set up the payroll. Now, if we think about this just from like a system of just a register, what would actually happen? And if you got a third-party payroll to process the payroll and you were going to enter that into the system, then this is one way you might look at it, and we'll try to do the journal entries to see what is actually happened to the accounts possibly a little bit more clearly. So in this case, we got Adam. We're going to say it's the $4,583 gross pay, federal income tax, his federal income tax that we had to take from out, Social Security, his Social Security, his Medicare. There's the net check, which is the gross pay minus the FIT minus the Social Security minus the Medicare. Erica, $2,400. We took out her FIT, her Social Security, her Medicare to get to the net pay of $1,856. Now note, you can think about these as two separate checks, enter them into the system, which you would have to do if you processed in the QuickBooks system as two separate checks, or from just the impact on the financial statements, you could think of the whole payroll, all your employees, as kind of one person, in which case you'd say, okay, the total was at $6,983 for all of my employees, right? My employees as a unit. And then we've got the FIT was taken out at $1,080. Social Security was taken out of their check, $433, Medicare taken out at the $41. So the net check in total, or net decrease in the checking account, $5,429, which you can enter in the system as one entry, although you do have to be careful because in the reconciliation, although this would end up in the same end result, you would see these two checks on the bank statement versus the one entry that you would enter into the system if you entered them all in as if they were one group entry. And then we would also have the employer taxes matching Social Security and Medicare for Adam and Erica. And then we would also have the FUTA, which we're taking out of this practice problem. So that adds up to another $474. There's no cash impacted here. So this would be increasing an expense, the other side going to payroll liability. Payroll liability then would be this $1,080, the Social Security, the $433, the $433, and the $41 and the $41 for the Medicare after this payroll's processed. If we recorded the transaction then, the transaction related to the payroll checks as kind of one unit, as if they were one unit, would be the payroll expense goes up by the 4583, which you could see right here. The payroll expense goes up by the this is just Adam, 4583. And then you got the checking account goes down by the net check, 3572, which is this item. And then the difference is going to be these three, which is going to be the payroll liability. So we got the checking account goes down, we've got the payroll expense goes up, and then the payroll liability goes up. We look at the GL, the payroll expense went up by the $4,583, the gross pay. The payroll liability went up by the liabilities that we took out, federal income tax, Social Security, and Medicare for the employee portion thus far. Checking account went down from the $94,570 down by the $3,572 net check to the $90,998. Now Erica is going to have a gross payroll expense $2,400. The checking account going down by the $1,856, and then the difference, FIT, Social Security, Medicare, being the payroll liability. So there's the payroll expense, payroll liability, and the checking account. So if we see the GL accounts there, we've got the payroll expense was at the $4,583, up by $2,400 to the $6,983. The payroll liability was at the $1,011, up by $544 for the second check to $1,554. The checking account was at the $90,998, down by $1,856 to $89,141. And so then we've got the employer portion that we owe over and above. So that's going to be the payroll tax expense and a liability, no cash impacted. We're going to have to pay this at a later point in time. When we pay the other liabilities, that's going to increase the liability again. And then we'll have the payroll tax expense down below. The accounts impacted, payroll tax expense going up by the $474. The payroll liability was at the $1,554, goes up by the $474 to the $2,029.